Hello and welcome to the Banker's View from Sibos video series looking at all the hot topics here in Sydney. I'm Joy Macknight, Deputy Editor at The Banker, and I'm joined by Emma Loftus, who's Head of Payments and Receivables Treasury Services at JPMorgan. Emma, thanks so much for joining us today.
Thank you.
When I spoke to you last year in Toronto, you were just on a panel about sort of how correspondent banking was changing. Has anything changed in the past year that sort of made you change your mind about what you were saying at that time?
Still as bullish about correspondent banking as I was. So what's changed? It's actually, we've progressed the innovation agenda. A lot of the pressure that the correspondent banking teams were feeling had a lot to do with what fintechs were doing in the payment space. And so thinking about correspondent banking and what we could do as financial institutions to push back centered a lot around technology. So what's changed? GPI is rolling out. We have more bank penetration across the whole track and trace methodology that the SWIFT teams have implemented. JPMorgan itself has more than 100 participants in our in-network, so thinking about how banks can apply blockchain technologies to some of the friction points in correspondent banking, we're solving it. So I'm actually even more bullish than I was before about the health and future of the business.
There's been a lot of change in the US, especially with the rollout of real-time payment system. What has been the challenges to doing that?
It's very exciting. First of all, we haven't had a new payment system in the US in more than 40 years. So rolling the system out really requires full participation from the banks in the US. So some of the limitations that we've had so far have to do with this concept of ubiquity. It's like having the first telephone. If you're live, JPMorgan's live for pays and receives, but there's no one to talk to, there's not a real good business case for corporate clients to move forward. Exciting news, though, in the fourth quarter of this year, a few of the other major financial institutions in the U.S. will be implementing faster payments, and we think with that implementation, you're going to see much more growth.
Okay, and it's interesting that there's now faster payments in about 40 jurisdictions across the world. Are your corporate clients really asking for the cross-border real-time payments?
So what the corporates are looking for is to be able to reach the beneficiaries as quickly as they can with as much certainty as they can. So they don't come to me and say, hey, I need a solution for faster payments across the globe. What they say is, I have a need to reach beneficiaries in new ways. So we either need to pay them through a wallet, we need to actually pay them through the faster payment scheme. Can you help me figure that out? Because for me to implement that solution in 40 jurisdictions is just too difficult. What I want to do is talk to one bank, JPMorgan. I'm going to give you my payment file and you get the money to the beneficiary as quickly as you can, or as effectively as you can, or how the beneficiary wants to receive funds. So we are seeing more demand, not specifically for faster payments, but it's these solutions to be able to allow corporates to disperse payments to the world as effectively as they can.
Okay, and what innovation is happening in the receivable space?
There's actually a lot going on. So it's not all about payments, although it is a matter of perspective. On the receivable side, very similar challenges to how clients are trying to add more efficiency to their processes. On the collection side, typical issues that you see with corporates have to do with how they can predict incoming funds from their remitters. How can they understand how their remitters are going to pay them? And when they do get paid, how can they actually reconcile those transactions so that they're posted to their back-end systems or posted to their corporate subsidiaries as quickly as possible? Some of the solutions that they're implementing to help fix this have to do with moving to a single account and then managing receive on behalf for the rest of the organization. Other opportunities have to do with virtual account management solutions. So in some cases, corporates are saying, here, every single one of my underlying corporate clients, you get an account number, it's a virtual account number. All of the funds will be concentrated with that virtual account, but what they can automate in the background is all of the receivables pooling to a single physical account to help them manage liquidity, help them manage their capital flows more effectively. So thinking about it on the incoming side, many of the similar problems that our clients have on the payable side, and it's all about automation. It's all about retooling systems so that we can leverage data more effectively to help automate reconciliation. And really, at the end of the day, the clients are looking to post and manage as quickly as they possibly can.
Okay, we're a bit early on in the conference, but what would you say is the buzz on the floor?
Still, it's all about innovation. It's so exciting now to see, though, so many of these concepts and pilots actually becoming reality. I know in our own case at JPMorgan, last year we piloted our in-network, and it was just a pilot. We're going live with 2 other participants. We're going to figure out if blockchain technology can work to expedite compliance inquiries, and we'll be back to you next year. And here we are. We have more than 100 banks signed up. I'm seeing that across the board. GPI success, more penetration across the banks. Everybody, concepts are actually becoming reality.
Excellent. Thank you so much for your insights, Emma.
Thank you.